Hype briefly overtakes Dogecoin in market cap as privacy tokens. Slide Hyperliquid's Hype token briefly overtook Dogecoin in market capitalization during overnight trading on May 26, 2026, according to a CoinDesk Markets report, with the flip occurring as U.S. strikes on Iran sent risk assets lower, and privacy-focused tokens fell harder than the broader market. The rank swap was short-lived but notable. Hype has been climbing through the top of the altcoin table on the back of fee revenue and a continuing buyback, while Dogecoin has stalled in a range that has held since the broader crypto pullback began earlier this month. The fact that the flip happened at all, even briefly, is the data point that matters. It puts a revenue-generating exchange token ahead of the largest meme coin for the first time in a multi-cycle context. The setup behind the flip, the trigger for the broader market reaction, was geopolitics, not crypto-native flow. CoinDesk attributed the overnight risk-off move to U.S. strikes on Iran, with privacy tokens sliding the most across major altcoin categories. As of May 26, 2026, Bitcoin trades at $76,150, down 0.7% on the day. Ether sits at $2,093, also off 0.7%. Solana is the weakest of the majors at $84.36, down 1.7%. XRP holds 134. The CoinMarketCap Fear and Greed Index reads 39, in fear territory. Those moves are modest in isolation. The story sits in the dispersion, not the headline numbers. Privacy tokens lost ground at a multiple of the major coins sell-off, and the relative ranking changes inside the top 20 are where the rotation is showing up most clearly. Hype, which has spent the past several weeks absorbing fee revenue into token buybacks, benefited from a flight away from speculative meme coins into tokens that point to a cash flow story. Privacy tokens led the downside. The privacy token slide is the second piece of the report worth unpacking. Tokens like Monero, Zcash, and Dash typically trade with elevated regulatory risk premia. When geopolitical tension rises and the dollar strengthens against risk assets, that risk premium gets repriced quickly. The category does not have institutional flow to absorb the selling, and the order books are thinner than the majors. What is harder to argue from the data alone is causation. Privacy tokens often move on regulatory chatter that has no direct link to the geopolitical headline. The CoinDesk piece flags the correlation, not a specific catalyst. Readers should treat the privacy token underperformance as a market structure observation rather than a confirmed response to the Iran strike news. Hype's path to the flip Hyperliquid's token has been one of the standout performers across the past quarter. The protocol has reported $1.16 billion in annualized fee revenue, and the buyback mechanism funded from those fees has been the cleanest demand story in the perpetual sector. Hype briefly cracking Dogecoin's market cap is the logical conclusion of that trajectory, a revenue-tied token taking share from a meme-driven one during a risk-off window. Dogecoin has its own structural problem here. Without a fundamental cash flow narrative, Doge trades on retail sentiment and broad altcoin appetite. When the Fear and Greed Index sits at 39 and the macro tape is heavy, retail is the first flow to disappear. The token has not had a notable catalyst since the early year payments narrative faded. Whether the flip sticks past today's session is the open question. Hype and Doge have traded close to each other on market cap for several days, and the rank can reverse on a single large block trade. The directional read matters more than the snapshot. Capital is rotating from memecoin exposure into tokens with a fee revenue thesis, and the macro backdrop is accelerating that rotation rather than dampening it. Practical reading for spot holders. For traders watching the top-of-book rankings, the takeaway is that market cap rank changes in this part of the cycle are increasingly driven by buyback mechanics rather than spot demand alone. A protocol that systematically removes supply through fee-funded buybacks has a structural tailwind that a fixed-supply meme coin cannot match in a flat tape. The risk-off backdrop also reinforces a broader theme from this month's tape. Bitcoin's demand metrics turned negative earlier in May, and spot ETF outflows have continued without a strong inflow week to break the pattern. In that environment, altcoin rotations cluster around tokens with a cash flow or buyback story, and exposure to meme coins or thinly traded categories tends to get punished first.